We are breaking in right now with urgent, frankly alarming economic data that is sending absolute shockwaves through the financial world. Listen to this number. 49.8. That is the very latest reading of the University of Michigan's Consumer Sentiment Index. And guys, it is a violent, unprecedented crash. In fact, it is literally the weakest reading since they started this survey way back in 1952. So why the sudden freefall? Well, we are tracking a rapidly unfolding global economic shock that has flipped the entire script overnight. Welcome to this special investigative explainer. Today, we're diving deep into exactly how the joint U.S. and Israeli military strikes of February 2026 and the massive retaliatory blockade of the Strait of Hormuz are fundamentally reordering the American economy. What started as a localized security crisis has officially morphed into the most significant supply chain shock in modern history. We are witnessing a radical pivot toward what analysts are calling the architecture of autarky, which is essentially a global retreat into closed, completely self-reliant national economies. Okay, let's jump right into Section 1, the global economic shockwave. We need to look at exactly how the macroeconomic landscape was flipped, almost instantly, from a nice disinflationary cooling trend straight into a stagflationary crisis. Looking at the hard numbers from the latest data, the reality of this textbook negative supply shock just hits you right in the face. In these severe shock projections for 2026, U.S. real GDP growth has been slashed to a meager 1.5%. But at the exact same time, the federal funds rate is spiking to over 4.00%. Because inflation has violently unanchored, jumping to 3.3% by March as energy costs surged, the Federal Reserve is trapped in a brutal dual mandate paradox. Any hopes the market had for 2026 rate cuts? Yeah, those are completely vaporized. We are buckling in for a higher-for-longer regime stretching late into 2027. Moving right along to Section 2, fractured global energy markets. Here's how this geopolitical earthquake physically shattered global energy flows and ripped apart long-standing alliances. The sheer scale of this choke point is honestly catastrophic. When the Iranian blockade hit on March 4th, it instantly choked off 20% of the entire world's seaborne crude oil. And it gets worse. Nearly 30% of global liquefied natural gas is currently trapped. With Qatari facilities taking retaliatory damage that could take years to rebuild, you have to understand this isn't just a temporary hiccup. It is a structural amputation of global energy capacity, and it immediately sent spot prices tripling over in Asia. And the ripple effect here has moved with blistering speed. Following the strikes on February 28th and the closure on March 4th, we got a massive breaking development literally just yesterday, May 1st, 2026. The United Arab Emirates has formally abandoned OPEC. Let that sink in. This is the single biggest challenge to Saudi leadership in 50 years. The UAE is now aggressively pumping up its domestic production to 5 million barrels per day. They are breaking away to grab market share in this wildly volatile, every nation for itself energy environment. Which brings us to Section 3, tech and agriculture in crisis, because we are now seeing how these energy disruptions are tearing through sectors you might not immediately connect to the Middle East. To grasp the true depths of this supply chain shock, we really have to ask the big question. What on earth does a Middle East conflict have to do with AI and microchips? Like, how exactly is the modern digital economy, our smartphones, our cloud servers, the AI boom, tethered directly to the world's most volatile waterway? Well, the hidden culprit here is actually helium. But blockade didn't just stop oil, it instantly halted 30% of the global helium supply. And helium is a critical, non-renewable input for etching and cooling in semiconductor fabrication. So this shortage is threatening global chip production right at the exact moment that next-generation AI data centers are begging for a massive 120-fold increase in power. We're talking up to 600 kilowatts per rack. The market is in full-blown panic mode over this vulnerability. Over in South Korea, which is a massive semiconductor hub, the Kospi stock market plunged a terrifying 18% in just 4 days. Investors are waking up to the fact that the brain of the digital economy relies entirely on Middle Eastern stability. But hey, the crisis isn't just happening in the cloud. It's hitting your dinner table too. We're tracking a severe agricultural crisis domestically, all driven by the food-energy nexus. See, natural gas is the primary ingredient for nitrogen fertilizer. So with gas prices going parabolic, nitrogen fertilizer costs jumped 32% in a single week. And this hit right during the absolutely crucial 2026 spring planting window. Throw in Midwest diesel prices spiking by $1.50 a gallon, and American farmers are facing catastrophic costs. It's forcing a massive acreage shift away from nitrogen-heavy corn straight into soybeans, which fix their own nitrogen. Bottom line, get ready for massive retail food inflation to hit your local supermarket later this year. All right, moving to Section 4, America's New Fortress Economy. In response to all these cascading systemic threats, the U.S. government is executing a radical fiscal shift. And here is the staggering figure you absolutely need to know. $1.5 trillion. That is the new, jaw-dropping budget request for the Department of War, what we formerly called the Department of Defense, for fiscal year 2027. It's a massive 44% increase from 2026. Because munitions were burned through in the Iran conflict faster than we could ever replenish them, this money is urgently earmarked to stockpile critical weapons, invest heavily in counter-drone tech, and commission new warships just to project maritime power. At the exact same time, the Department of Energy is essentially being retooled as the engine of this fortress economy. They are rapidly deploying billions to lock down domestic power through the Baseload Power Initiative. They're taking 3 urgent steps. First, grid resilience and reconductoring, which is a fancy way of saying upgrading the physical wires on existing transmission lines so they can bypass 15 years of permitting delays. Second, funding a true nuclear renaissance, using small modular reactors to guarantee AI data centers and factories get 24/7 carbon-free power. And third, hydrocarbon hardening, upgrading our existing coal and natural gas plants with on-site fuel storage so they can physically survive the next global disruption. Now let's hit Section 5, the de-dollarization threat. Because building a fortress isn't cheap, and it's unwinding the U.S. financial system. Building this economic fortress requires unprecedented, monumental borrowing. Right on the heels of that massive defense spending, we slam into this number, a $39.01 trillion national debt as of March 2026. And honestly, what's even more alarming is the sheer velocity of it. The debt is now growing by $1 trillion every 5 months. With Treasury yields surging up toward 4.4%, just paying the interest to service this debt is becoming a critical pressure point. It's risking a future era of severe, painful domestic austerity. And as the U.S. throws around aggressive sanctions globally, adversarial and even neutral nations are racing to bypass the dollar entirely. They're accelerating totally alternative payment architectures. Take the mBridge platform, for example. It's a new international payment system, and it just settled over $55 billion in cross-border trade, with a stunning 95% of that volume in the digital yuan, no dollars involved. Meanwhile, BRICS-Pay is rapidly expanding local currency settlements for energy. The U.S. is fighting back, threatening 100% tariffs on any nation de-dollarizing, but the reality is stark. The global economy is literally splitting in two. Finally, Section 6, winners, losers, and you. As we bunker down for what analysts are calling a cost of living siege, let's break down the sectoral outlooks. The market fallout is intensely uneven right now. Capital is just aggressively flooding into the winners. Defense and aerospace are seeing record demand from that massive budget hike we talked about. Domestic natural resources and mining are absolutely thriving as global supply chains falter. And cybersecurity, it's booming as we scramble to protect our grid. But the losers are facing an existential squeeze. Airlines are watching jet fuel costs more than double. The auto sector is battling high gas prices and critical aluminum shortages. And construction, it's basically stalling out entirely, thanks to surging material costs and sky-high interest rates. I want to leave you with this incredibly stark warning from the International Energy Agency. They are officially calling this, quote, the greatest global energy security challenge in history. Think about that. The core assumptions of the last decade, cheap energy, low inflation, and a unified, happy global supply chain, they've abruptly ended. It's over. So as the dust settles on this new, fragmented world order, the ultimate question is how will you, your investments, and your family survive the realities of America's new fortress economy?